Yes. So, welcome to the first day of CA Final Paper 3 Advanced Auditing and Professional Ethics session. So, I hope for everybody the voice and the video is clear before I proceed further. And even on YouTube also, people are acknowledging. Somebody please acknowledge me on YouTube also so that I can proceed further. It's okay. So in this particular subject, CA final, generally in group one of the nightmare subject, no doubt, it is advanced auditing. Generally, people have a very big misconception that this is a very theory and moreover a boredom subject. It is completely wrong, not because I'm a faculty of auditing I'm saying this, but because the subject is in reality is the most practical subject. If we discuss the subject in a most practical manner, I think you will come away over the thought that it's a theory subject or it's a boredom subject. In fact, if we discuss the subject in a most practical manner, it will be much more interesting than financial reporting and strategic financial management. Like, let us assume if you are beginning your career as soon as you qualify as a chartered accountant, 99% of the cases, the work that you are going to do is related to audit, or it may be related to SFM. Suppose if you are appointed in an asset management company, or if you are recruited by some other company, so generally audit is the major subject. Audit is the most important subject, and at some cases only you will be having to look at reporting related aspects, financial reporting related aspects, index related aspects. Especially if you look at big four, 90% of the works are related to audit and advisory related, audit related, most of the works. And let us enter into our subject. Let's enter into our subject. What is our approach to this subject of auditing in our upcoming sessions? As I already told you at the beginning itself, even in my previous video where I'm discussing about this batch, upcoming batch, I clearly mentioned the session will be, auditing sessions will be for 170 to 180 hours, I said, where in the market generally 130 to 150 is prevailing. I have additionally added some 20 to 30 hours minimum additional hours that I'm taking. You may ask me, so why we need to spend 170 to 180 hours? The logic is very simple. The subject length is of such that if I cut short the subject, maybe I can explain within 120 or 130 hours. But the subject length is such that where I cannot cut short. Moreover, from the past 2 years especially, I'm not talking about before 2 years situation. I'm talking the situation from past 2 years, especially if I remember correctly, May 2019 exams onwards. Not, I mean, at CA final and at CA inter, at both the levels, there is a welcoming step from the institute, that is, papers have become advanced. Paper standards have been increased drastically from May 2019 exams. And maybe for some students, they may feel it is bad luck, but I'm telling you, at the welfare of large interest of entire CA fraternity, if the paper standards have been increased, you will have greater demand. Why? Because those students who really do not study the best will not be promoted. Only those students who have given real efforts, who have really learned something, only they will be given promotion. So if the institute maintains higher standards in examination, the respect of the profession will be retained like that. If at all the papers were becoming easy, and if at all everyone are able to easily qualify the exams, naturally the profession respect will also gradually decrease. So the paper standards have been increased, which is a welcoming step. Accordingly, our auditing subject also, if you look at, the paper standards have increased like anything for auditing. I'm telling you, before May 2019, if you check, the papers will be 3 or 4 pages or 2 or 3 pages. But now auditing papers some 7 to 8 pages. Because the practical questions were involved. Not even 7 to 8, I can say 15, 20 pages because of MCQs also. Case study MCQs are also. The amount of practical way of questioning the student has increased enormously. But then in the past 2 years in group 1, many students are failing CA final advanced auditing most of the occasions because they are still sticking to the old method of learning. Once upon a time, they used to ask you straight away, what is an opinion? But now they are asking you a paragraph. They are giving you a paragraph. Some paragraph they'll draft and give you, and they'll ask you to identify which paragraph it is, which opinion it is. They'll create a situation and they'll ask you, is it a professional misconduct or other misconduct? They'll create a situation and they'll ask you, if you are, if at all that particular client approached you, do you suggest a management audit or operational audit? So now the question papers are completely application oriented. Yes, I agree. Auditing is once upon a time theoretically was tested, but now they are not testing auditing theory. They are testing applied auditing. They are testing application oriented questions most of the times nowadays. Whether you look at recent RTP or whether you look at MTPs or you look at the recent last 4 or 5 attempts related question papers, the amount of practicality into the subject of auditing has been increasing attempt by attempt, exam by exam, which means institute is making the paper standards really tough. Now in this situation, how can I stick to my the old methodology of 130 or 120 hours when the paper standards have increased enormously? The amount of discussion that we should take in the classroom should also increase enormously. See, I personally believe two important things. And if you ask me honestly, what is the best way of learning? Self-preparation is the best way of learning, and nobody can say it is wrong. Nobody have dare also to say this is wrong, because if I did self-preparation, many of the practicing CS and many of the faculties also have done self-preparation. In fact, if you do self-preparation only, you get the command on the subject, you become a master on the subject. Self-preparation is best. But then what is the drawback of the self-preparation? You need to spend so much of time on research. If you want to understand auditing and assurance in self-preparation method, 250 hours you have to spend for understanding the entire subject thoroughly, minimum. I'm telling you, this is a minimum time if you are a fast learner. Plus another 150 hours approximately to revise the subject thoroughly so that to get a grip. So you will have to spend 400 hours if you want to do a self-preparation. But I'm telling you, if you attend the class, your efforts will be reduced drastically to 170 to 180. So let's assume you're attending my class for 170, and I'm telling you, you don't require to prepare the subject 100 hours, 150. You just have to spend another 70, 250 hours is the maximum time that you have to spend on auditing in your entire CA final, including classes plus preparation. And coming to our classes, the way we are going to conduct the classes will be for 170 to 180, right? In this, the core content, the entire actual content, we are going to discuss for 150 to approximately 160 hours. This is what actual discussion of the subject. So then what about 20 to 30 hours balance left? That is allocated for revision. What is this revision? What I personally believe is, if I finish chapter by chapter and proceed further, by the time I reach some 9th or 10th chapter, you would have already forgot the first, second chapter. So what I followed, what the new methodology, what I'm taking is, the moment we complete first 4 chapters, we will have a session for some 4 to 6 hours to revise all these 4 chapters. And then again, the moment we complete next 4 or 5 chapters, then we will spend minimum 10 to 12 hours for once again revising all this. Yes, in the class. This is a method, this is a technique which nobody has followed. By the way, whether you are attending for my live classes or whether you are purchasing my recorded classes, this facility is available for you also. Even if you are a recording classes purchaser, you will get revision lectures also in between. So again, as soon as we complete this entire this discussion, then we will have a final revision of 10 to 12 hours. Why, sir? Sir, here you are saying 10 to 12 and here also you are saying 10 to 12 for entire subject revision. Why? Because of the learning curve theory. Because we already learned certain chapters, we revised it already once or twice. In the third segment of revision, third set of revision, oral revision, third set of oral revision, you don't require to spend the same amount of time. Your efforts will decrease drastically. So the learning curve effect, experience curve effect will apply. So naturally within 10 to 12 hours, you can revise entire auditing. And again, as a complimentary service, what I'm going to do for my students before their eligible attempt, because now this particular sessions are for November 2021 and May 2022. Of course, there are few students who joined in this live session who are writing in July exams, because they want to at least cover 2/3 of the syllabus minimum. So which will be covered well before the exams. And thanks a lot for showing that kind of trust towards me. So predominantly our focus is for November and May. Believe me, the syllabus applicable for the July exams, November exams and May 2022 is going to be same. Sir, what if there is an amendment? How about the amendments sessions? Yes, I will conduct amendments session for all of you complimentarily. Those whoever have joined with me for auditing classes, I will conduct complimentary amendments session for you separately. So this is what I'm going to deliver you. So right now, until now, whatever I spoke about is the deliverable from my end to your end. And I already told soft copy material will be sent. And after a few days, recorded classes, whoever is purchasing, we are going to send hard copy also for them. So instead of soft copy, but right now, whoever have joined for live classes, for them, I'm sending you soft copies. You just have to take a printout. That's it. Now let us have an overview on the entire subject of auditing. Let us have an overview on the subject that we are going to discuss. Before I proceed further, I will just wait for 5 seconds. Kindly reply those who are watching in live. Okay, students who are watching in content browser live, can you please reply in our Telegram group? Are you do you have, okay, please reply. Until now everything is clear, I hope. Once if you reply, I'll proceed further. Yes, fine. So I'll proceed. Now, this is the most important discussion. Please listen carefully. Now, whatever I'm going to explain you is most important. Suppose you observe the index which I gave. I know I have not mentioned page numbers, intentionally I have not mentioned. If you observe, there is a chapter called fundamentals. This is a new concept which is exclusively available with my classes. Whether I take CA Inter or CA Final auditing, I will have a separate class on fundamentals of the subject. Like many a times, one common mistake that we do wherever, whatever the subject is, we directly enter into the actual content without understanding the nook and corners of the subject, without understanding the actual important terms, terminology that we are going to use throughout the subject. So to clarify you, the basic terms that we are going to use in this entire subject, we are having a separate chapter called fundamentals. This is a chapter which is an exclusive feature available with me only. Then, if you look at the index which I'm showing here, as per ICI material, study material and our material, which means in ICI material, what is the chapter number? And in our material, what is the chapter number? I mean, in ICI, they have given some index order, right? As per ICI material, there are totally 18 chapters. Few chapters have subparts also. Unit 1, Unit 2, Unit 3, like that. 16th chapter is having 3 subparts. So, example. So, 18 chapters. As per ICI material, main chapters are 18. But in our book, we are having totally 23 chapters. We have divided all the 18 chapters of ICI material into 23 chapters. First, make a note. And whatever the order given by ICI material, we are not going to follow that. We are going to follow a different order which is given below. So what is the reason behind arrangement of chapters like this? Like, why have you chosen company audit as the first chapter? Why audit reporting is the second chapter? Why standards is the third chapter? Can you show some light on what is the logic behind the arrangement of these chapters? Yes, the arrangement has a very clear logic. If you observe, first I will give you an overview of this arrangement, then I will go inside each and everything what we are going to learn there. I will give you a brief overview. If you observe, fundamentals is technically speaking not there in the ICA material. So in our material, I am naming it as zero chapter. Zero chapter means a basic chapter. So our actual content discussion starts from the first chapter. So if you observe clearly, I'm just changing the color of the pen. The first chapter, second one, third one, 4, 5, 6, 7, 8. Observe carefully. All these 8 chapters are related to audit and assurance. Of course, in fact I can say assurance I can eliminate. I strictly say all these 8 chapters deals with audit. Sir, which audit, sir? Statutory audit. All these 8 chapters, major emphasis is on statutory audit plus consequences. If at all you are unable to do this statutory audit properly, if you are negligent in delivering the statutory audit responsibility, what consequences? Whether you did the statutory audit properly or not, who can do the statutory audit? How can they do the statutory audit? How to give the report? What they can do, what they cannot do, and how to identify whether they did correctly or not. Everything we are going to discuss. Company audit speaks about who can be appointed as an auditor of a company, who cannot be appointed as an auditor, how to appoint them, who will appoint them, when they will be appointed, can they resign. So all law related stuff we are going to discuss in company audit chapter. Then we are straight away discussing reporting, which is the ultimate responsibility of the auditor. Every one of us learned in our CA Inter or IPCC that the auditor's responsibility is to give opinion. Yes, right? Every one of us know that. The auditor responsibility is to give opinion. How to give this opinion? How many different opinions are available? What is the format of giving the opinion? All that we are going to discuss in this particular chapter called audit reporting. In audit reporting, we are going to cover 12 standards almost 12 standards on auditing we are going to cover. 12 different standards on auditing we are going to cover. I'm telling you, all these 12 standards are very important. Sir, what is the weightage, by the way? I'll come to that question because you are very enthusiastic about weightage. I'll come to that question for sure. Just wait for a moment. Then, then we have certain standards other than these 12 standards. Actually, we totally have 36 standards. Earlier, until before 2019, we are having 46 standards at CA final. 46 standards. Not auditing standards. Out of 46, 35 deal with auditing standards. One standard is a quality control standards. Another 10 standards deals with other assurance and related services. But now, luckily, from the curriculum of CA final as well as CA Inter, assurance and other services, related services standards are eliminated. Okay, so that is something a good news. So out of 36 standard syllabus that we have in CA final, 35 standards deals with standards on auditing, one standard deals with standard on quality control. Out of these 35, 12 standards we are already discussing in audit reporting. Remaining standards we will be discussing at standards and guidance note chapter. In the standards and guidance note chapter, we are also going to discuss about how the institute sets up the standards. What are the different documents that Institute of Chartered Accountants of India releases to members? All that stuff we are going to discuss. Then we are starting straight away a professional ethics. In fact, if someone asks me, so what is the difference between CA IPCC and CA final? In Inter, you learn basic concepts of auditing, basic level of standards on auditing. At final, you will learn advanced auditing and professional ethics. The advanced concepts of auditing you learn means the same auditing that whatever you learned at IPCC, how to apply that. Applied auditing is what? Something specialty at CA final plus ethics related concepts. Then we are also going to discuss about audit committee and corporate governance. Especially this chapter has been designed completely keeping in mind listed companies. For listed companies, one of the important topic is corporate governance. There are some specific responsibilities for the statutory auditors in case of listed companies. In case of listed companies, there are some specific responsibilities for statutory auditor. So that we are going to discuss in the 5th chapter. What are the special responsibilities of the statutory auditors in case of listed company? Even chapter 1 company audit also deals about who can be the statutory auditor, who cannot be the statutory auditor, all that. Third chapter and second chapter also deals about standards on auditing applicable generally for statutory auditor. Fourth chapter in professional ethics, what we are going to learn is what a chartered accountant, once you qualify as a chartered accountant or even while you were in articleship, okay, what are the things that you are allowed to do, what are the things that you are not allowed to do, what you can do, what you cannot do. Getting it? Do's and don'ts. Professional ethics is a chapter which I can call it as do's and don'ts by a chartered accountant. So we are going to learn a code of ethics, a code of conduct, in fact, how you have to conduct your profession once you qualify. That we are learning in the professional ethics chapter. Then, now suppose here you have so many responsibilities, right? Company audit, reporting, standards, professional ethics, committee, corporate governance, you have so many responsibilities, right? What if you fail? What if you fail to comply with any of them? You are having some liabilities. So liabilities of auditor chapter addresses what if auditor fails to comply with his responsibilities. It may be a legal responsibility under company law. It may be a reporting responsibility under standards, or it may be other responsibility as per code of conduct of ICI, that is professional ethics. What if you fail to comply? What if you have not complied with them? So liabilities chapter will answer that question. What if an auditor is involved in fraud? Liabilities of an auditor, that chapter speaks about that. Then 7th chapter, if you observe, a new concept at which we at CA final exclusively learn: peer review and quality review. You see the word review. Review means what? Verifying something. What you are verifying? You are verifying the auditor himself. See, generally, what is the logic? Auditor will be appointed for a company. He will verify the company books and financial statements and he will give an opinion. That is what we all know. In peer review and quality review, what happens, See, audit means what? Whether company financial statements, are they right or wrong? Auditor will answer. Auditor will give the answer. Whether the auditor, look at this question carefully, whether this auditor has conducted his duty properly or not, who will answer? Who will verify? Somebody is there who will verify our services. Are we delivering our services correctly? See, I told you, right, there are some liabilities. There are some liabilities you have. If you have not complied, if you have not complied with any of the above conditions or requirements, you have some liability, right? How will people identify your liability? Peer review and quality review is one example of that. Okay, so what is peer review? What is quality review? What is difference between peer review and quality review? I'll come to that later. We'll discuss in that particular chapter in depth. So, and the 8th one, audit under fiscal laws, revenue laws, audit under income tax law, and if you observe the 23rd chapter, audit under indirect tax law. If you observe, for this I'm not giving a material, I'm straight away going with ICI material because there is not much to edit in that. Okay, so we are discussing ICI material for indirect taxes audit. One more reason why I kept it at last, is if you look at February 2021 budget, our Honorable Finance Minister Nirmala Sitharaman announced that GST audit is no more mandatory for certain entities, most of the entities. And of course, there is now a rift going on between our members and the government. How can you remove GST audit? If GST audit is not there, there will be so many non-compliances by the SSCs which cannot be identified. So some issues are going on. So there is a 50-50 chance that GST audit may come back or may not come back. So that is why what I did is I kept it at last. Within another next 20 days, I think we will get to know whether GST audit will be again coming back or not, mostly. So anyhow, whatever, irrespective of that discussion, I kept it at the last chapter. Whereas audit under direct tax law, tax audit, we all know. I think every one of you are doing articleship, every one of you are in articleship probably, and now since you are taking auditing coaching, means probably you are in second year or third year of articleship. So you know very well, you know very much better that tax audits means what, form 3CA, 3CB, 3CD, all that you would have filled. So how to do that tax audit, so that we are going to discuss in 8th chapter. This is according to me segment 1. See, I will just a minute. So in the entire advanced auditing, segment 1, if you observe segment 1, 8 chapters we are going to discuss. 8 chapters. I'm dividing the syllabus into 2 different segments, or I'll let us do one thing. 3 segments we will divide. 8 chapters we are going to discuss. All these 8 chapters generally deal with statutory audits. Generally. Okay, all that, most of the content what we are discussing there is related to, directly or indirectly related to, statutory audit. So that is regarding segment 1, which we are going to discuss. And if you observe the index which is given, once again, these chapters are given in the ICA material at so and so places. These chapters are discussed at so and so places. You see, the first chapter that we are going to discuss, company audit, is discussed in ICA material at 5th place. 5, 6, 1, 18, 7, 14, 17A, 17B, 12A. That's how ICA material gave that. But what I strongly feel is, if you learn this chapter in this order, you will have more tremendous knowledge. You will get more clarity, more command on the subject. Our learning approach is also very, very important. It's not just our skill set. Our approach towards the subject is also most important to gain good command on the subject. Then coming to the second segment. Okay, I'm again changing the color, green color. Why I'm using green color, you know, here the 9th chapter, 10th chapter, 11 and 12. These are the 4 chapters. Though in our exams the weightage is little low, though in our classes also our attention towards this chapter is not as much as that we give in segment 1, but these are the 4 chapters which are emerging now. You know, these are emerging professions for chartered accountants. But now the chartered accountants are being used productively in the field of operations, in operational activities, in management activities, in the internal affairs of the company. The CS are no more working only with respect to attestation function. Today CS are working on value added activities, how to create value addition for the company. So we are working on that. You know, we do value addition in the form of cost reduction. If a cost has been reduced, profit increases, company value has been added. So today we chartered accountants are creating value addition to various companies by reducing cost for them, by analyzing operations, management, internal activities. In fact, if you take any big 4 enterprises, even if you have some friends in big 4, whoever is doing articleship, or if some of them are doing jobs also, ask them. The most common works that they do is internal audit or risk management audit or operational audit, something they do, because that's an emerging. And due diligence, there is another new concept called due diligence. What is due diligence? Generally, if a company want to acquire another company, I'll just give you a small example, a simple example. If a company, suppose we all know Facebook has acquired WhatsApp. Yes or no? Facebook has acquired WhatsApp in 2015 or 14, somewhere around. So what Facebook has did, you know, before acquiring WhatsApp, Facebook have sent certain professionals to the WhatsApp, you know, company, to the company called WhatsApp. They do research about entire WhatsApp company, their management practices, their development practices, technology related practices, everything they review, they verify, go in depth and give a report to the Facebook finally. And after looking at the report which is given by these people, the Facebook will decide finally whether to buy WhatsApp or not. And accordingly, they purchased it. Now we are giving a report, right? That report is nothing but due diligence report. That report is nothing but due diligence report. So that is due diligence. Due diligence is used in I'm just giving you one example where due diligence is used. Okay, fine. Next one, fraud investigation. The next concept is fraud investigation. You would have heard about SFIO. SFIO. Sir, we know SFI, sir, Students Force, Students Fraternity of India. No, not that. I'm talking about SFIO, Serious Fraud Investigation Officer. He is the one who will report to top management of the company. If at all, if a company believes that there is some fraud in the company, they will call SFIO. And these SFIOs sometimes report to SEBI also in case of listed companies. Serious fraud investigations will be going on in listed companies sometimes. So in a company, if the top management or the medium level management believes that there is some fraud, to identify the fraud, they will call people like you and me, chartered accountants, to investigate whether there is a fraud or not. So what are the things, what are the complications in this, what are the concepts involved in this, that we are going to learn in the chapter fraud investigation. We are going to learn in the chapter called fraud investigation. And then third concept is forensic audit. The third concept is forensic audit. Generally, fraud investigation and forensic audit goes side by side. Generally, fraud investigation and forensic audit mostly similar, but there is a slight variation. Forensic means evidence in court. Evidence in court of law. Forensic means evidence in court of law. Forensic meaning evidence in court of law. So forensic audit is generally done. Forensic audit is generally done with respect to a pending litigation at some court or arbitrary tribunal or at some other tribunals. When a particular case is in arbitration process, in order to resolve the arbitration, there is some necessity for investigation, and that's when the concept of forensic audit comes. Here in forensic audit, the objective may not be exactly related to fraud. The objective in forensic audit is fact finding. Whereas in fraud investigation, the objective is to find a fraud. So fraud investigation is very narrow, whereas forensic audit objective is very broad. Of course, there are mixed arguments on this, but I'm just giving you a basic idea. So this is the second segment. So if you observe the second segment we are going to discuss is internal management operational audit, fraud investigation, due diligence, and one more thing is forensic audit. You know what is the weightage of all these chapters? 20 to 30 marks maximum, that too I'm saying you. You know what is the weightage of segment 1? I know every one of you are interested about weightage rather than the subject. So segment 1 weightage is what, almost 70 to 80 marks. Segment 1 weightage is 70 to 80 marks, whereas segment 2 weightage is 20 to 30 marks. Then the balancing figure is segment 3. The balance subject is segment 3. Now, if you observe segment 1, we are going to learn the core concepts of audit, stat audit related. Who can do stat audit, what is their responsibility, what are the standards on auditing, what they can do, what they cannot do, who will verify their work, what is his liability, and what are his responsibilities for listed companies. All that we are learning at segment 1, which will occupy 70 to 80 marks. And then we are learning emerging professions for chartered accountants. Emerging professions for chartered accountants, that is segment 2, where we are learning about internal audit, management audit, due diligence, forensic audit, fraud investigation. The minimum weightage will be 20 marks and up to 30. By the way, the weightage which I'm talking about includes MCQs also. And there is a plus or minus 10 to 15% variation is possible between the weightage I'm talking about. 10 to 15% variation can be possible from exam to exam. Don't say me, sir, in last attempt from this segment 1 only 55 or 60 marks only asked. You are saying no, that variation is slightly possible, but I'm telling you predominantly how the weightage will be. Then coming to segment 3, we are going to learn about audit of different enterprises. In first chapter to 12th chapter, if you focus, we are actually learning various concepts, various contexts of audit. Stat audit context, internal audit, forensic audit, fraud investigation. We are learning the subject in different contexts. Whereas in segment 3, we are learning how to do audit of certain special enterprises, how to do audit of public sector undertaking, government company, how to do audit of a banking industry, how to do audit of an NBFC, how to do an audit of an insurance company. This is segment 3, I can say. This I can say segment 3. This I can say segment 3. Sir, you said the 3 segments, the entire subject. What about the balance chapters, sir? If you observe audit planning and strategy, risk assessment, audit in automated environment, these are the chapters which are discussed in ICA material at 2, 3, 4 places. If you look at ICA study material, second, third, fourth chapters are these 3. But these 3 chapters are covered already at CA Inter in a very in-depth manner. But generally at CA Final, these chapters will not be explained, but I decided to explain them at the last. Okay, so this is segment 4, I can say. Segment 4 I can say, but I don't want to classify it because this is something which you already learned at CA Inter. Even 20 also, by the way, 20 also, 17, 18, 19, 20 chapters we already covered in CA Inter. Then coming to 21st chapter, which is schedule 3, which is there in our ICA material at part 5. Schedule 3, in fact, you would have discussed in depth of schedule 3 in financial reporting. And on schedule 3, actually how much time it takes for us to discuss schedule 3, 15 to 20 hours it will take. If not 15, at least 10 hours it will take, which you already spent when you are understanding financial reporting. So that is the reason I am not covering schedule 3. I am not covering schedule 3. This is the only chapter I am not covering. Sir, what about consolidated financial statements audit? I will cover. For which we are using ICA material directly. There is no much to filter in that. So I decided to give ICA material. I am not like a very rudimentary person where you should follow only my book. Wherever my book is correct, I'm telling you, please follow that. Wherever ICA material is correct, let us follow ICA material. See, at the end of the day, whoever it is, whether it is me or anybody else in India or anybody else in the world, everybody copies from the main source only. First point you have to understand. I'm very open, I'm very honest to accept this fact. So, consolidated financials, how to do the audit, we are going to discuss from ICA material. And why I kept this chapter at last year, this is completely accounts related topic. So nowhere connected in the above. Getting it? So, and moreover, considering the students, at least I just want them to revise consolidated financials one before listening to the audit aspect of that. So what you have to do, by the time we complete all the 2021 chapters, you have to finish consolidation chapter in your financial reporting. Finish it off. Then how to do the audit of CFS, we will discuss in the auditing subject. And the last chapter, audit under indirect tax laws. That is the 23rd chapter. And you see, disclaimer I gave. Generally in any other book or any book that you see, there is a disclaimer that care has been taken to overcome mistakes or errors, whatever. So I just used an auditing terminology. I exercise a reasonable skill, care, diligence to ensure this content which is given in this material is free from material mistakes. And I am giving complete credits to my material to the ICI, of course, because that is the main source material which every one of us follow. That's it. So I think I gave you how we are going to learn the subject. I hope every one of you, whoever is watching, understood the approach towards the auditing. Even if at all a student want to do self-preparation, if he follow in this pattern, he will definitely see a good result. So just I will again take a few seconds break. In the meantime, all of you, please reply in the Telegram. Those who are watching the live session in our application, please reply me in the Telegram. I will start with fundamentals chapter within few minutes, few seconds. And whoever is watching in YouTube also, I hope please give me a reply. I hope every one of you are clear. Yes. So getting back, so I have got certain replies. So as I already told, I gave you the entire overview for the subject. I gave entire overview for the subject. Now let us look at the examination, this one also, examination pattern. How in exam we are going to get this. Just a minute. So what is the weightage in the exams? So paper 3, advanced auditing and professional ethics. The weightage will be for 120 marks. The entire paper will be for 120 marks, out of which 20 marks is choice. But we all know 30 marks we will get MCQ objective paper and 90 marks is descriptive paper. 90 marks is descriptive and 30 marks is objective. Out of this 90 marks, 20 marks you are having a choice. Whereas in objective paper, you don't have any choice. Okay. So we will discuss the subject in a very in-depth manner. I want every student of mine to score 30 out of 30 in objective paper. You must score 30 out of 30 in objective. Yes, how can we score 30 out of 30 in objective? Having absolute command on the subject. Having absolute command on the subject and concepts especially and the terminology. And we will give all our best efforts in our all the classes to have absolute command on the MCQs, all that, getting it. I mean, wherever possible, I will give you an MCQ. Whether in a particular concept MCQ can be tested or not, in the classes I will tell you also where MCQ will be tested, where it will not be tested. I will also mention that in the class. So whenever a particular topic I mentioned that it is relevant for MCQ, you have to observe it carefully. MCQs is based on your observatory skills. It's not based on your memory alone. It's based on how good you are at observation. Now descriptive. In this, if you are able to score at least 30 marks out of 70, you can get 30 here. 30 plus 30, you can easily score 60 in auditing. So exemption, getting an exemption in CA final audit is not a big deal, provided you plan your subject understanding in such a way. If you understand the subject in such a way, getting exemption is absolutely clear, absolutely safe. Next, coming to the next discussion directly, as now I already gave you the entire subject overview and how we are going to learn the subject, what is the logic behind arranging the order of the subject, and now we are going to start the zero chapter. I can say the zero chapter, fundamentals of auditing. This is a chapter which I exactly take at CA Inter also. Now again, don't ask me, sir, why sir for CA Inter people standard, why you're also teaching at final? See, whether you're a final student or inter student, there are some basic things that you have to learn in order to crack the subject. The basic things is what we are going to discuss here. Okay, so now I'll start with the definition of audit. We all know the definition of audit. Even our segment 1, if you remember our segment 1, in the entire segment 1, what is the predominant focus? The predominant focus of entire segment 1 is regarding audit. That too stat audit. So what is meant by an audit? So what is an audit? So that I'm going to discuss. Maybe this particular session may appear very bottom, like where you may think it is very basic level, but believe me, this will give you real fruits in our upcoming sessions. You will really understand, you will feel really flexible, you will feel really flexible at various terms in our future sessions. So the first one, audit definition. If you look at the definition of audit, I'm not writing directly, I will open the material and show you the definition of audit. Fundamentals material. If you look at the 13th point, it speaks about definition of audit. What is the definition of audit? Audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. See, we need to understand certain terms in this. An audit is an independent examination of financial information. So they are using the words, they are using two words. They are using two words. Independent examination, and they are also using another word called financial information. Independent examination, and another word which they are using is financial information. So independent examination of financial information. In order to understand this, I want to give you one story. Actually, I'll open one more OneNote. I will use blackboard instead of whiteboard. Your eyes will not pain much when we are using blackboard. 1 minute. Just for a few seconds. Yes. So I think blackboard will be much more convenient. Let us continue blackboard only. Okay. So audit is what? Audit is what? Audit is an independent, 1 minute. Audit is an independent examination of financial information. So what is independent examination of financial information? To understand the definition of audit, let us discuss one story. We all know today, if you want to do business at large scale, at a very bigger scale, at India level, pan India level, or at international level, we generally know that we have to incorporate a company. So if you want to do business at a national level, at international level, you generally, the form of organization that we choose is company. And we all know company is the one which is headed by board of directors, and in this company, investors will invest the money. These investors are called as shareholders. We all know that these investors are known as a shareholder. So in this company, every investor has a share. Every investor has a share in the company. He's having a part of the company is owned by him. So the investors are the one who are the actual owners of the company. But we all know these investors do not run the company. Understand, these investors do not run. All the investors do not run. What they do, these investors will appoint few number of directors onto the company board. These investors will board certain directors onto the company. That's why the word came, board of directors. So these are the one who are boarding the company. Actually, who are boarding the company? The board of directors who are appointed by the investors are the one boarding the company. They are the one who are running the company. Now you see what is happening in this story is, let us take an example of Tata Consultancy Services. Let us take the example of Tata Consultancy Services. I will show you how many shareholders Tata Consultancy Services are having. I'll show you right now how many they have shareholders. So for which I'm using BSE India portal. I'll just show you right now BSE India portal. You go to BSE India portal, Bombay Stock Exchange, and here there is a option called corporates, and there is another option called corporate filings. If you observe here, there is an option called shareholding pattern. You just click on that shareholding pattern, and what is the company that we are looking at? Tata Consultancy, TCS. Okay, yeah, so select that, and the announcement period here, it is there today. No, not today. You just let us select last 1 year. In the last 1 year, What is the shareholding pattern in Tata Consultancy Services? Let us look at. In the last 1 year, the shareholding pattern is filed by listed company to the SEBI every quarter. So March 2021, which means 2 months ago. So what is the total number of shareholders as on March 31st? So March 21, you see, this is the shareholding pattern of the Tata. Okay, shareholding pattern of the Tata company shares. And if you observe here, if you see, total shareholding pattern has been classified into 3 parts. Promoters and promoter group, how many they are holding, public, how many they are holding, shares underlying like differential rights, employee stock options, non-promoter, non-public shareholding. These are all you will get in company law, SEBI regulations, I think. Okay, if at all you have not come across this terminology, don't worry. When you are listening company law classes, you will get all this clarity, especially SEBI regulations. Generally, when students are final, when they are reading SEBI regulations, they take it very light, but actually they're very important. If you want to do top level management audits, SEBI regulations, you have to be perfect. Okay, now if you observe here, promoters are holding 72% in the starter shareholding and public is holding 27%. And you see the number of shares that the public is holding is one, you see here, almost it is 102 crore, 102 crore shares, 78,26,707. Almost 100 crore number of shares. 100 crore number of shares are held by public. And shall we see the public shareholding details? Pattern of public share. If you click on that, you will get it here. If you click on that, you will get it here. Public means who are all holding. Public means nothing but other than promoters. Now, public includes government also. So, mutual fund companies, how many they are holding, foreign portfolio investors, how many they are holding, trust, how many they are holding, foreign companies, how many they are holding, body corporates are holding how much, individuals, retail investors are holding how much. You get entire list here. So, 100 crore number of shares. Now, imagine how many shareholders are there in this company. Promoters are one segment of shareholders, and another segment of shareholders is general public. Equity shares. I'm talking about number of shareholders. Tomorrow, you just open Demat account, have some 4,000 rupees money in your account. You just you just buy TCS. One share you bought, you are a shareholder. Simple. Even if you're having one share, you are a shareholder. You are having ownership in the company to the extent of shares held by you. Okay, so which means there are typically lakhs of shareholders out there. Now you see what is happening. These lakhs of shareholders are giving their money. They are giving their money to an artificial person called company, to a notional person. Actually, there is no person. Company is nothing but a paper. It's a piece of paper. Getting it? So to whom actually they are giving money? Not to the company. This company is controlled by whom? Actually, the bank accounts, everything is controlled by whom? Board of directors. Understand? So the shareholders are giving their money to board of directors. Actually speaking, substance over form. Of course, we don't directly deposit into their accounts. We deposit into the company account, which is managed by board of directors, which is completely in the control of the board of directors. Now you see, we are giving so much of money to the board of directors. What they have to do on behalf of all our shareholders, these few number of board of directors, they do business. They do a business activity. They just do a business, and they do business. What they do with the money, whatever we give, first they buy assets. They buy plant and machinery, buildings, furniture, everything. They buy all the requirements, factors of production, I can say. The board of directors will first acquire factors of production, and they use that factors of production and they sell. They provide services, or they rent, they sell goods. Nothing but selling of goods and services. They generate revenue and they incur some cost and they will get some profit, and that profit is who's actually yours. You are the investor, you are the shareholder. Out of this profits, we are not giving you entire profit. We are keeping some profit for future purpose, retained earnings. We are giving you some amount called dividend. You have given us so much of money, crores of money. That entire crores of money we invested. By investing that entire crores of money, we did some business activity. After doing that business activity, we generated some profit. Out of the profit that we generated, we are giving you certain percentage of money. This is what happens, right, in any organization also, whether it is a company organization or partnership organization or LLP or societies, corporate societies. This is what happens predominantly. Now there is a problem. Some shareholders, not some, majority of them are having some doubts. Array, I gave 100 crore, all of us together we gave 100 crores to the board of directors, okay, and the board of directors come back and gave you just 1 crore in return. 1 crore only he gave as a dividend. What about 99 crore? You asked a question to him. He gave two statements. Don't worry. Look at these two statements. What are they? Balance sheet and P&L. Most important documents. Balance sheet and P&L. You gave 100 crores. He returned back you 1 crore within some 6 months or 1 year. And you asked the question, what about 99 crores? And the director, instead of replying you, he replied in the form of balance sheet and P&L. Don't worry. Whatever the amount you gave, they are in the form of assets, and we have certain liabilities. We got this much income, we incurred this much, and we got this much profit. Out of this much profit, some profit we gave you in the form of return on investment, that is called dividend. Now these shareholders are having doubts. Or we all gave 100 crore money to him. He is saying he purchased all this. He is saying he has to pay this much, and still the company is having some net worth, net amount, something is there. He is saying this much sales are there, these many purchases are there, this much is the profit of the company. So the investors who invested, no, they have some doubts. So whether this is right or wrong. How can I believe the director completely? Now you may get a question here, sir, if you don't believe him, why did you give money? Based on his credibility I gave, based on the directors, promoters credibility I gave, but at the same time I'm not trusting them 100%. I have to verify, no? So that is what a pure democracy is about. Yes or no? Democracy is something that present across the world, not just in India. But in India, democracy is their entire country, not only in the aspects of company. Okay, fine. Anyhow, so I'm having doubts on these numbers, whether they are correct or not. Do directors really did business? Do they really purchase those assets? See, we are all so many lakhs of shareholders out there. We cannot go to the company building. All of us cannot go there. It is not possible to verify each and everything by all of us. If at all we go and verify each and everything, when will they do the business? So there is a need for one mediator. There is a need for one person who can clarify all our doubts, and that person is called auditor. Audit. What is an audit? If you look at the dictionary meaning of audit means to listen. To listen. Audit means to verify. We just have to verify. So what we do, we all of us have formed a meeting. We all have formed a meeting. We called one person. We called the person and we sent that person to the company. We gave him all the rights. We sent that person to the company, and this person who is called as auditor, this person will go to the company, will look at the documents given by the directors, will look at all the assets, all the liabilities, everything. He will look into it, everything. He will take his own time, and finally one day he will come back to all of us and give us a report saying whether the status of money we gave, is it correct or not, whether the statements given to us by board of directors, balance sheet P&L they gave, right, this is what we did with your money, saying that the balance sheet P&L is given to us by board of directors, right? So whether that documents are correct or not, whether they're correct or not. See, actually why I send this fellow, I'll just sum up this story. I gave 100 crores to 10 members, 10 directors. These people did the business, just returned me 1 crore. I asked, what about 99 crores? They are saying they gave two documents. This is what your 99 crores is lying with us. And I'm having whether this is really true or not. I just want to know, is it correct or not? Okay, whatever he said, I'll believe. But I just want somebody to confirm me whether this is correct or not. And that somebody who will confirm me is nothing but the auditor. Is nothing but the auditor. He will go and verify and come back to me and say that it is, whether it is correct or incorrect. That's it. The auditor duty is to respond whether it is right or wrong, whether it is correct or incorrect, whether it is reliable or unreliable, whether it is true and fair or not. He will give us opinion. He will verify and give us opinion. What he is verifying? He is verifying the balance sheet P&L. He is verifying internal books, related documents, records, everything. He is verifying entire financial information. And this is what the concept of audit. This is what the concept of audit. Now, coming to Let us proceed further. So if you look at the definition once again, if you look back at the definition, so what is audit? Audit is an independent examination. You observe the word used is very cleverly, independent examination. Why independent examination? We are sending one person, no? Do we send a person who is related to the management, who is related to the directors? We don't. We make sure the person whom we are sending should be neutral, should be independent. So we send an independent person. For what? Examination purpose. Examination means what? Verification. What? Financial information. What is financial information? It includes financial statements, nothing but balance sheet, P&L plus notes plus cash flow plus books of accounts. Financial information includes all of this. So to verify them, we are sending an independent person. Getting it? So audit is an independent examination of financial information of any entity. It necessarily not company only. It may be any organization. It may be having profit oriented objective or non-profit oriented. It may be profit oriented or non-profit oriented. The company may work for money or may not work for money, may be working for service. Suppose the company is actually a very big trust. We are all giving donations. I want to know whether the company is using the donations rightly or not. So audit is something common, whether it is profit oriented or non-profit oriented. It doesn't matter. Objective doesn't matter. At the end of the day, what is happening? I gave you money, you are giving me 2 documents. I have a doubt, is it right or wrong? Auditor will go, check it everything and come back and tell me, is it right or wrong? Auditor will visit the company, come back to me and explains me, is it right or wrong? That's it. His duty is to comment whether it is right or wrong. Now, whether these documents are prepared with a profit-oriented objective or non-profit oriented objective doesn't matter. What answer I want from auditor, is this information, balance sheet P&L information, is it right or wrong? That is what we want from the auditor. Nothing much. So, profit oriented or not, irrespective of size or legal form, a beautiful sentence, irrespective of size or legal form, whether the balance sheet P&L is 100 crore, whether it is 10 crore, whether it is 1000 crore, whether it is 6,57,000 crore. So what is 6,57,000 crore? It's a Reliance Industries turnover. So whatever the amount it might be, for me amount also doesn't matter. I want to tell him, I want him to reply, is it correct or not? If it is Reliance 6 lakh crore turnover, is it right or not? I want him to tell. If it is a small company, it may be 1 crore only turnover, but I want him to tell, is it right or not? So what I am expecting from the auditor, is same. Whether it is a small company or big company, is it a company or partnership firm, doesn't matter. When I send somebody to verify, he will have to verify and come back and tell me, is it right or wrong? That's it. Whether profit oriented or not, whether the entity is profit oriented, size, legal form, doesn't matter. Why? Because the examination is with a view to express opinion. The objective of the auditor is to give opinion on the financial statements. The objective of the auditor is to give opinion on the information. So we are sending that person to verify everything and come back to us and tell his opinion. Is it right or wrong? That's it. When this is the objective, why am I worried about profit oriented, non-profit oriented, irrespective of size or legal form? It doesn't matter. You know what is legal form? There are so many legal form: partnership firm, LLP, company, cooperative society, AOP, sole proprietary, artificial judicial person. Sir, you said income tax person definition, sir. Of course. Yes. Okay. See, according to me, there are only 2 forms of organizations. Two forms in which you can run your business. There are only 2 forms. One is individual. You can run business individually on your own, or it may be a group of individuals. If you are an individual, you are simply called as sole proprietor. You are the single owner. Proprietor means owner. Group of individuals, when group of individuals are doing business, it's called association of person. When group of people are doing business, it is called as association of persons. When group of individuals are doing business, we simply call it as association of persons. What is association of person? See, I'll tell you what is AOP. Two persons or more than two persons or more than two persons come together, invest money, do some business activity, share the result. Correct, no? What happens in partnership firm, what happens in LLP, what happens in a company, what happens in a society is same. Actually, substance over form is same. What happens in partnership firm? Two or more than two partners, two or more than two persons coming together as a partners, invest money, do business activity, share the profit. What happens in LLP? Same. What happens in company? Two people or more than two, they come together, invest money, do business activity, share the profits. That's what, right? So substance over form is same. So then why we are calling a particular association as partnership firm, particular association as LLP, particular association as company, particular association as society? See, essentially all these are enterprises. All these are enterprises. All these are concerns. All these are establishments. All these are organizations. All these are firms. These are all essentially enterprises. But where this enterprise registered, how this enterprise is exhibiting itself towards legal authorities, how these enterprises are exhibiting itself towards legal authorities, how they are exhibiting, that is legal form. Suppose you and me together started a business, we want an agreement between us, right? We should have an agreement, right? Because if some dispute comes, resolve, we have somebody to resolve, somebody should be there to resolve, so we must have some agreement. We both went and registered as per partnership act, it's a partnership firm. We both registered under companies act, it's a company. We both registered under societies act, it's a society. We both registered under LLP act, it's an LLP. What if we both did not register anywhere? AOP. That's it. AOPs are nothing but unregistered association. Unregistered. Of course, we have not registered anywhere, no? What are we? You and me associated, came together, association. Have we registered anywhere? No. Sir, what is a registered association is called as? What a registered association is called as? A registered association is called as a partnership firm if the association registers under partnership law. A registered association is called as LLP if the association registers under LLP. A registered association is called as company if they register under company. For me, company, LLP, partnership firm, everything is same. They are all association of persons. Maybe depending upon the scale, the number, complexities will increase. That's legal form. So tell me whether a partnership firm appointed me as an auditor, whether a LLP appointed me as an auditor, whether a company appointed me as an auditor, society appointed me as an auditor, whoever appointed me, my duty is same. I will give opinion. That's it. I will say whether it is right or wrong. When somebody appointed me, I just have to verify, give opinion. That's what my duty. That's the definition of audit. Now you see the definition of audit, you'll never forget in your life. Audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. That's it. Before I proceed further, if you observe, I have not yet explained the word. One of the most important keyword in the entire definition of audit is financial information. Sir, what is financial information? What is financial information? I have not yet explained. So what is this? Let us take a 5 minutes break, 5 minutes gap. Then I will come back and then explain what is financial information. That's it. So kindly take take back seat for 5 minutes, okay, and we'll immediately start. I'm not stopping the screening, I'm just muting my video. So getting back, just 1 minute online. So now we have covered the audit definition. We have covered the definition of audit. Now we have pending topic in this chapter is what is meant by financial information. In the fundamentals topic, understanding the meaning of financial information is at most important. So what is financial information? As I already said, financial information includes both financial statements and books of accounts. Financial statements and books of accounts. And I hope every one of you would have seen in your articleship whenever you're attending the audits, especially, you know very well how different organizations maintain books of accounts. But given articleship, I can confidently say, because I'm also coming, I also did articleship, right? So financial statements means what? Yeah, I know that, but I'm not talking about the components of financials. I'm talking about the concept of financial statements. So what is the concept of financial statements? You know, we have two sets of financial statements. We have two sets of financial statements. One is general purpose financial statements, another one special purpose financial statements. We have two sets of financial statements. One is general purpose financials, another one is special purpose financial statements. What are special purpose financial statements? Special purpose financial statements are prepared as per special purpose framework. What are general purpose financial statements? General purpose financials are prepared as per purpose framework. If the financials are prepared using special purpose framework, it's a special purpose financials. If the financials are prepared using general purpose framework, we call it as general purpose financial statements. Now, so what is meant by special purpose framework, general purpose framework, special purpose financial, general purpose financial? In which context we use it? Special purpose framework means it's a financial reporting framework. First understand, it's a financial reporting framework where the financial statements are prepared, and presented, as per requirement of a specific user. Look at the word I'm using, specific user. What is special purpose framework? It's a financial reporting framework. I'm using another new word here. What word I'm using? Financial reporting framework. And in fact, you have a subject called financial reporting. So you must know the word what is meant by financial reporting. And the continuation is framework. Framework means understand rules and regulations. Framework means very simple, rules and regulations. See, whenever you're preparing balance sheet, whenever you're preparing profit and loss, you're following some rules, right? So that rules are called as framework. What rules and regulations? Rules and regulations related to what? Financial reporting. What do you mean by financial reporting? Preparation and presentation. The most important word is presentation. You are not just preparing, you are presenting, you are reporting for the sake of third parties. Whatever you did in the business, for the sake of third parties, you are reporting, you are preparing and presenting. Preparation and presentation of financial statements is called as financial reporting framework. So what is financial reporting framework? Rules and regulations for preparation and presentation of financial statements is called as financial reporting framework. And I'm telling you how important this term, in entire standards on auditing. We have 35 standards on auditing. The word financial reporting framework is used more than 1,000 times. More than 1,000 times, the word financial reporting framework will be used in 35 standards. And I know many students who read without understanding the basic meaning of financial reporting framework. I'm sorry to say this. There are many students who don't exactly understand what is financial reporting framework. And now there is another word called AFRFW, applicable financial reporting framework. There is another term, another important term, applicable financial reporting framework. What is applicable financial reporting framework? I'll come to that later, but I hope I clarified the financial reporting framework. Now you see, what is special purpose framework? It is a financial reporting framework. It is related to preparation and presentation of financials, but it is a framework where financial statements are prepared as per requirement of specific user, for a particular user, for a particular purpose, for a specific purpose. If we prepare financials, we call it as special purpose financials. And you went for audit, right? You would have done audit in the articleship, right? For some companies, some stat audits you would have done, right? And right, your principal is signing balance sheet P&L at the end of the audit, right? What are those financial statements? They are general purpose. They are general purpose. They are not special purpose. We generally come across very rare the concept of special purpose financials in reality. So maybe for a particular insurance related purpose, or maybe for a particular loan reasons, or maybe for amalgamation, maybe for some business acquisition, they prepare financial statements by not following generally accepted principles. They prepare financials on a scientific way, modern way, for private confidential business usage, and those are special purpose financials. General purpose financials are those financials which are meant for a keyword general public. If you are preparing and presenting the financials, if you are preparing and presenting the financials for general public, if you are preparing and presenting financial statements for general public, we call it as general purpose financial statements. These are the financials which are prepared keeping in mind GAAP, generally accepted accounting principles, example, accounting standard, fundamental accounting assumptions. And these are the financials which are prepared on periodical basis, and the periodicity in India is once in a year, that is annual. So general purpose financials are those which are prepared using general purpose framework. So what is general purpose framework? General purpose, it is also a financial reporting framework. It is also a financial reporting framework. It is related to financial reporting only. So it is a financial reporting framework where financial statements are prepared and presented, as per common, look at the word I'm using now, common financial information needs, of wide range of users. Common financial information needs of wide range of users. Financial information needs of common needs of wide range of users. Wide range of users means who? It may be a shareholder, it may be a government, it may be an employee, it may be a prospective investor, it may be a statistical officers, it may be a stock market analyst, whoever it might be. Everyone are using it for decision making. The financials which are prepared on annual basis, namely balance sheet, P&L, cash flow notes, these are general purpose. For what purpose you prepare? Generally I prepare. Every year I prepare generally. For whom? Generally for everyone. They are general purpose financials. And as I told, our segment 1, 8 chapters we have, right? All these 8 chapters, our predominant focus is on general purpose financials, especially the most important topic in entire our advanced auditing subject, that is standards on auditing. This entire standards on auditing are discussed in the context of general purpose financial statements. The entire standards on auditing are discussed in the context of general purpose financial statements. This is the first important fact you have to remember. Even when you are studying at CIPCC auditing and assurance also, your entire IPCC syllabus is prepared in the context of general purpose financial statements. But in final segment 1 I'm talking, right, this is exclusively predominantly focuses audit in the context of general purpose financial statements. Forensic audit, fraud investigation may be related to general purpose or may be related to special purpose. Due diligence, generally due diligence is special purpose assignment where special purpose financials may be prepared. So that's about general purpose financials and special purpose financials. Now you know what are the terms we understood. General purpose financial statements, one new term we understood. Special purpose financials, general purpose framework, special purpose framework, and there is another term called financial reporting framework. These are the terms we understood. Now we need to understand another term, applicable financial reporting framework. In one of your MTP, applicable financial reporting framework definition has been asked as an MCQ. Even this fundamental topic also important for you at CA final. Don't think it is not important. It is important. Sometimes a 2 marks MCQ or a true or false question can come. Maybe on these fundamentals. If the examiner want to really test the conceptual knowledge of the student, he may test on these. He will not ask any question from so and so chapter. He will ask on these questions. Generally, where students may not be that confident. So, what is applicable financial reporting framework? Tell me. Every one of you would have done bank audit in articleship. Yes or no? You would have done bank audit in articleship. Some of you might have exposure towards NBFC audit. Some of you might have exposure towards insurance company audit. Some of you are doing audit of some foreign company. Some of you are doing audit of general private limited company. Some of you are doing audit of some listed companies. So in your articleship, you would have come across financial statements of private limited, public limited, listed, NBFC, banks. Yes or no? Tell me, are they all preparing financial statements using common formats? Are they preparing financial statements using common principles? No. You know, we have two accounting standards. One is Ind AS, another one is accounting standards. You know that? Ind AS is applicable for certain enterprises, whereas accounting standards are applicable for certain enterprises. Most of the private limited companies only follow accounting standards. They don't follow Ind AS. And almost all public limited companies and listed companies, they prepare financial statements using Ind AS. You know that, right? So the format of presentation, the information you are presenting, even if you look at schedule 3, it has two divisions, division 1 and division 2. One division deals about if the financials are prepared using Ind AS. Another division speaks about if the financial statements are prepared using accounting standards. So the format of financial statements, format of balance sheet, format of P&L, format of cash flow, format of notes, format of statement of changes in equity will slightly influence depending upon the framework, rules and regulations that you have to follow. So whenever you are doing an organization, whenever you are doing an audit of an enterprise, whenever you are doing an audit of a particular enterprise, first you must know what is the applicable financial reporting framework. First you must understand what is applicable financial reporting framework. So what is applicable financial reporting framework? It is decided based on nature of the entity and objective of the financials as per the law, objective of financial statements. What is the nature of the entity? If it is a partnership firm, framework may be different. LLP, framework is different. Company, framework is different. Listed company, the framework is different. Rules and regulations are different. If it is a bank, the framework is different. Objective is what? Are you preparing for general purpose annual basis or is it for special purpose? What? So applicable financial reporting framework is decided based on nature of entity and objective of financial statements. So that's applicable financial reporting framework. And with this, one of the most important fundamental term, that is financial information. The topic is completed. What is financial information is completed. So now again come back to the definition of audit. It's not yet over. Now we have to discuss about so ultimately what is the objective of audit? In the definition we understood, we independently examine the information because the information is prepared by directors or giving to shareholders. Shareholders are having doubt, they appointed you, you just have to give the opinion. So what is your objective? What is your objective? If you look at the objective of the auditor, no, what is objective of auditor is explained in standards on auditing, that is SA 200, which you would have already understood at CA interlevel. So once again I'll repeat before I proceed further. So what is the objective of the auditor? As per SA 200, the objective of an auditor is to obtain reasonable assurance, whether reasonable assurance about whether financial statements are free from material misstatements, and to report on the said financial statements. So the objective of auditor is very simple. The objective of the auditor is to obtain reasonable assurance. What is reasonable assurance? I will discuss in the standards. When we are discussing in the standards, I will explain you there what is the concept of reasonable assurance. When I'm discussing the standards on auditing chapter, I'll explain that. So what is the assurance you want? You want to know whether the financial statements are free from material mistakes, whether financials are containing any mistakes, because directors, they gave balance sheet P&L to shareholders, they are having doubts, are they right or wrong? So they appointed you. So what is your duty also? Whether the balance sheet P&L is right or wrong. Are they containing mistakes? Are they free from mistakes? That's what you're looking at. Okay, and then report. That's what your objective is. Verify, identify whether any mistake is there, then report it. That's it, your objective. Even the SA 200 clarifies very clearly, this is what your objective of the audit. Now here, one term that we need to understand is what is reasonable assurance, and I told you we will discuss about this when we are discussing standards. And another term is material misstatement. So what do you mean by material misstatement? What do you mean by misstatement? So misstatement means, first of all, statement means what? Stating something correct. I mean, whatever. So right now I'm, stating something. Right now I'm saying something. That's a statement. What is misstatement? If I state something which is not true, if I state something which is not correct, which is not reliable, which is not right, that's misstatement. Material means important, significant, big. Oh, it's a material, big. What is material? We will discuss. We have a separate standard called SA 320. There we will discuss. So the leftover is misstatement. What is misstatement? 99%, I can confidently say in CA final also, 99% of the students, I can say confidently, they don't know what is misstatement. They don't know the definition of misstatement. Misstatement? Misstatement is a difference between amount, classification, presentation, disclosure of reported financial statement item, and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. So what is there in the reported financial statement item? What is there in the reported financial statements item? Just a minute, 1 minute online. Just 1 second, for technical support of some live, I'm just forwarding a number. Yes. So what is misstatement? It's a misstatement is difference between Amount classification, presentation, disclosure of reported item. Amount classification, presentation, disclosure required as per applicable financial reporting framework. See, actually, these are the definitions which you have to be very familiar CA interlevel itself. But considering the gap you have, maybe your CA inter auditing preparation may not be at that greater level. Assuming that, I am once again repeating those basic terms which are very important. Okay, fine. So what is different? What is a misstatement? Misstatement is a difference between two things. What I mean, amount classification, presentation, disclosure of reported item. Amount classification, presentation, disclosure as per applicable financial reporting framework. Difference between this box 1 and box 2. Simple. Difference between box 1 and box 2. That's misstatement. Misstatement can be in 4 ways. It may be in the form of amount, like in the balance sheet P&L. No, the directors can show you a wrong picture in 4 different ways. It can be in the form of amount. It can be in the form of classification. It can be in the form of presentation. It can be in the form of disclosure. It can be in the form of disclosure. Mistake they can do in 4 different ways. I will take a very simple example, but as we are progressing, my examples will also improve, like in the sense like my example standards will increase a lot. Okay, since it is a fundamental class, I'm taking a very basic level example for your better understanding of the subject. So one mistake is what? Mistake is what? Mistake can happen in amount. Sir, can you give an example here? What is how a misstatement can happen in the form of amount? Every one of you know India is 16, right? India is 16, right? In that there is a concept called role. What is role? Decommissioning and restoration and other liabilities. Decommissioning, restoration and other liabilities. What is the droll value? What you have to do in India is regarding the droll value. What you have to do, this droll. This is also a cost which you are incurring to bring the asset into present location and use. Every one of you would have read. And this droll value you have to add to the capital cost of the asset. You have to add it to the capital cost of the asset, droll. Decommissioning, restoration and other liabilities charges, you have to add it to the capital cost of the asset. How do you calculate this droll? You calculate present value of future estimate. Present value of future estimate. So you estimate what would be the decommissioning and restoration charges at a certain point of time at future, and that future value, whatever you're estimating, you bring it present value, and that present value you will be adding to the capital cost. And whatever the finance charge is there, right, every year, and that you will provide treatment in accordance with Ind AS 16. Suppose if your future estimate is something wrong, you calculated this future estimate by taking into wrong facts, and auditor, you are the auditor, you identified that facts which are wrong. Now the mistake is in amount. Suppose the present value of droll is the management when calculating fixed asset, one particular tangible fixed asset capital cost, the present value of droll management considered as 1 crore, but actually according to you it is 2.5 crore. There is a 1.5 crore worth of difference, and you proved the management that their value is wrong. So this is a mistake. This is a misstatement. So misstatement may be in the form of amount. So the fixed asset, instead of showing 2.5 crore worth of one of the cost, it is showing only 1 crore. So 1.5 crore worth of undercapitalization, because of which depreciation will reduce, because of which profit will increase. See the effect. So the mistake can be in the amount. The mistake can be in the amount, or the mistake can be not in amount, but it may be in the form of classification. The misstatement can be in classification. Every one of you know Ind AS 16 and Ind AS 41. Investment property and PPE. There is a clear-cut definition given for what is meant by property, plant and equipment, and what is investment property. They have given a clear-cut definition in Ind AS 41. Suppose if an item of PPE is wrongly classified as investment property, it's a classification mistake. In schedule 3 also, if you observe the assets side, we have First item, fixed assets, then investments, then current asset. Investment property generally comes under investment, whereas tangible items which are PPE will come under fixed asset, and intangibles come under Ind AS 38, which is intangibles. That is again a different story. So if a particular item, a particular tangible item which is actually a PPE as per Ind AS 16 recognition criteria, but the company classified it as investment property, that's a classification mistake. That's a mistake of classification. I hope every one of you have knowledge of Ind AS. Okay, I hope you already have gone through the financial reporting. Generally the students, what is the trend is, generally a student finishes financial reporting and SFM like that, and then he will come for auditing coaching. So on that assumption, I'm taking Ind AS examples. Or vice versa, an investment property, an item which is actually investment property, but it may be classified as PPE. Sir, what's so specialty here? I mean, what happens if this kind of stuff happens? What's wrong with this? Any amount is same, no, but the results, the interpretation will be different. The interpretation will be different. Company performance is measured based on PPE, understand? Performance, operational performance. Whereas investment property is not operational performance. Investment property is an investing activity. PPE is something related to operational activities. The way we interpret the result will change. See, in a very big company, PPE value can be 3 lakh crore. Investment property value can be 20,000 crore. If it is 10 lakhs or 20 lakhs, decision making won't much affect. But if it is thousands of crores money is involved, decision making will affect drastically. So misstatement can be in the form of classification also. A third type of misstatement, I told you, misstatement can be in the form of presentation. Misstatement can be in the form of presentation. We all know there is a standard called Ind AS 37. Ind AS 37. And again I will use this one, Ind AS 16. Ind AS 37, Ind AS 16. You know, Ind AS 37 deals with many provisions. Ind AS 37 is what actually provisions contingencies, contingent assets and contingent liabilities and contingent assets. What is Ind AS 16? Property, plant and equipment. In property, plant and equipment, there is a kind of provision. Just now I took an example of provision for droll. Provision for droll. Provision for droll is discussed under Ind AS 16. Provision for decommissioning charges, restoration charges and other liabilities related to property, plant and equipment which have to be incurred at a future date. Whereas Ind AS 37 deals about general provisions. What Ind AS 37 says, you know, provisions which are in the nature of liabilities. Provisions which are in the nature of liabilities. A provision is a liability as per Ind AS 37. And accordingly, you show that liability under the liability side of the balance sheet. This provision will have a credit balance and you will show it under liability side of the balance sheet. This is the presentation technique for Ind AS 37 provisions, most of the provisions. Whereas Ind AS 16 also discusses about a provision which deals with droll, decommissioning, restoration and other liability charges as per Ind AS 16, which is an important concept. Yes or no? That provision is a provision against asset. This provision is a provision against asset. How you have to present it? Of course, this provision also will have a credit balance only. This provision will also have a credit balance, no doubt. How you present it? Do you present it on the liability side? No. We show it as part of asset. Of course, actually speaking, provision for droll is also coming on the liability side, but some provisions we reduce as part of asset. Provision for droll, I should tell you clearly, provision for droll comes under liability side only. Okay, and the same provision for droll you will be adding to the asset also, present value of the future estimate. It's a very tough topic, okay, but I want to give you an example where your financial reporting and auditing will be connected. And as an auditors, we have to see this. We have to see how company has presented the balance sheet, how the company has presented information in the balance sheet, what the corresponding accounting standard says, what applicable financial reporting says and what company did, what company reported in the financial statements of a particular item and what applicable financial reporting says. If there is a difference, I call it as misstatement. So misstatement can be in the form of presentation also, not necessarily in amount. Generally, whenever we think of misstatement in financials, we only think of amounts. No, misstatement coverage is very wider. It includes amount, classification, presentation, disclosure. Fourth one of misstatement is disclosure. Misstatement can be a disclosure. Suppose I mean in the third one, provision for bad and doubtful debts, we will show it as part of reduction from trade receivables. So one provision you see which is having credit balance, you are showing under liability side. Another provision which is also having credit balance, you are showing it as a reduction from asset. See, the presentation is different. So you need to check what presentation is applicable for such item. For a particular item of the liability, for a particular item of asset, how we have to present as per applicable framework, and how management presented, how board of directors actually presented in the financials. If there is a difference, it's a misstatement. And the last one, disclosure. The last one is disclosure. The misstatement can be in the form of disclosure also. The misstatement can be in the form of disclosure. So how a misstatement can be in the form of disclosure? How a misstatement can be in the form of disclosure? Suppose Schedule 3 says with respect to a particular asset, you have to present so and so information. And another accounting standard, corresponding accounting standard also says you have to present so and so information. This says 4 points you have to present, this says 5 points, totally some 9 unique points you have to present. 9 unique points you have to disclose in the notes to accounts. Or let us take an example of Ind AS 10. Ind AS 10, events occurring after reporting period. Events occurring after reporting period. And we all know events occurring after reporting period, nothing but we popularly call a subsequent event. Popularly we call it a subsequent event. The subsequent event are two types, adjusting event and non-adjusting event. We all know adjusting event is something that requires financial statements to be adjusted. An item of income or an item of expense will be adjusted. That's a subsequent event. What is non-adjusting event? It doesn't require any adjustment, but some non-adjusting event requires disclosures. Suppose there is a very big fire accident happened in the company in the month of May, well before approval of financial statements by competent authority. Before the approval of financial statements by competent authority, there is a fire accident broke in the company and huge loss is there, and there is no condition present on 31st March. So this is clearly a non-adjusting event. But then this is so significant issue, the company has to disclose it. But what the company management did, they didn't disclose. They're hiding it. They're hiding it. As an auditor, what you have to do? It's a misstatement. Something which company has to disclose, not disclosed. Something which the company has to disclose adequately is not disclosed adequately. So misstatement can be in the form of disclosure as well. So the misstatement can be in the form of amount, classification, presentation, disclosure. So misstatement is of 4 types, not just amount. And as an auditor, what is my duty? I must verify whether the financial statements are free from material misstatements. Whether the financial statements are free from material misstatements. Whether they are prepared as per applicable framework, nothing but. And then give opinion. That's it. So this is objective of audit. And I hope every one of you understood till now the objective of audit clearly. Can I get a reply in our Telegram group? Yes, final students. So with this, the definition of audit is completed, and we completed the concept of misstatement, applicable financial reporting framework, general purpose financials, special purpose financials, all that stuff. With this, most of the fundamental chapter terms were completed. So with this, the fundamentals chapter is over. There are few more terms in this chapter which are very easy. Actually, this fundamentals chapter is something which I take for CA Inter, but for final students also, since there is a huge gap, I once again took basic terms. But for final students, the examples which I took are completely based on Ind AS. Though it is common for CA Inter and CA Final in my class, at CA Inter, the kind of examples I take is different. Whereas at CA Final, the kind of examples I take are which are completely and extremely different. Because Ind AS is not there at CA Inter. Even if tomorrow, even in future, if Ind AS becomes applicable, they will not be having an, like a high, an extraordinary expectation from them, like from final students. That's it. So with this, the entire concept of fundamentals is completed. So what we understood in this session, very simple. The entire advanced auditing, we divided the subject into 3 parts: segment 1, segment 2, and segment 3. Mostly segment 1 will take approximately 80 to 90 hours of time, because that is something which is major weightage is for segment 1. Segment 2 will take maximum 30 hours, and segment 3 will take another 30 hours to 40 hours maximum. That's it. So actual segment 1, we will start from tomorrow. Okay.